Good morning, everyone. Welcome to the Stock Market Morning Prep video for Monday, March 30th. 2 more days of trading for the month of March. So we're going to let's do this top-down approach again. Like we usually do in the beginning of the week. Look at the weekly charts, then we'll go into the daily charts. Not much happened yesterday, Friday, Thursday and Friday for that matter. Janet Yellen came out with a speech at 3:45 Friday afternoon. Don't understand why that even made any sense at all. But nonetheless, that's what she did. Markets liked what she was saying a little bit, and then really didn't go anywhere. We did get some follow-through, though, in the pre-market, which I always hate when we get large moves like this, because then it takes just that much longer for a trade to set up. But we are up in the pre-market around 10 and a half handles in the ES electronic trading session. So we'll just see if these gains are going to be held, and obviously if we get some follow-through into the market hours. As you can see here in front, we have the spiders. By the way, excuse me, everyone, for my voice. I'm a little bit under the weather, so I apologize for that scratchy type voice. You can see the spiders, though. We did really nothing. We had one day down, a couple of days in between, but really nothing going on here. Yes, Thursday and Friday. I want to take a look at technology. Technology has been really weak. We'll go look at the Qs as well. XLK is the ETF for technology. You can see here we had 2 big days, one big down day. Couldn't even recover that 50%, which tells me that I do think that if we take this low out here from Thursday, then I think we're going to actually end up testing this low down here. Okay, so that's not a good sign for the bulls, at least for the moment. XLF, let's look at the banks and financials, holding up well. And all of the weekly charts are actually holding up quite well. We're still above the trend line, so that's a good sign. When we start to break on a closing basis, the weekly charts, then I think the markets will be in trouble, and it looks like that we would be seeing additional moves to the downside. But right now, that's not the case. The weekly charts are holding up well. Daily charts not so great, but you can see the XLF here hanging that 200-day moving average, double bottom in the XLF. But again, if you look at the price action, never really recovered here. Okay, so this is not a good sign. We needed to get back above that 50. We did not. So hopefully with today's move and pre-market strength, we could probably gap up a little bit and then start to move higher. And then that would alleviate that downside pressure at least a little bit, getting back above that 50-day moving average. And that's going to need to hold too as well, guys. So that's something that we're going to be keeping an eye on. Now the weekly chart here, a little different story, painting a little bit of a different story here. We're above the 20, which is good. We're broke below this trend line here back from 2012, so that's not a good sign. But let's see if we get back above it this week. Okay, one week does not make a trend change in a weekly chart, so let's just see what happens. But again, holding that 20 barely. Okay, so we're going to need that. We're going to need that 20 to stay intact here. Spiders daily, you can see never really recovered as well. So we still need to get back above the 50-day in the spiders. Excuse me. And again, I'd like to see us break this symmetry, this bearish symmetry of lower lows and lower highs, and break back above, making higher highs and higher lows. But again, here, double bottom. In between, we need to see this get back again above the 50-day moving average. Okay, diamonds here, same thing, guys. You can see that the markets are pretty weak for any type of a bounce here. So maybe we bounce and then we fail, and we're going to see how this retracement rally is going to turn out. I mean, obviously, we can literally just gap up today, and that would be the high. And that's what I'm going to be paying attention to today, okay? The first half hour of trading is going to be really critical on knowing what type of a move we're going to have for the day. Do we gap up and then we start to roll over, or do we gap up and gain momentum to the upside? And remember, guys, you can see here on the diamonds as well, we need to recover that 50-day moving average, and we need to do so in the next day or so, okay? Here's the transports. Transports here weekly again, okay? Holding that 50-day, 50-week moving average as well as the trend line. But again, look what's happening here. We're breaking this symmetrical triangle here and holding at 20. The transports, our leader, really needs to hold this area, because if we start to break down, and we really start to break down hard, every other index is going to follow it. Here's the transports, the 200-day, barely clinging. You could see, made no movement at all. to even try to recover half of this candle. So this is very, very weak. This is a bad sign for the bulls that we're barely clinging to that 200 on the daily chart. So we really need to get back above it. So hopefully we can get some momentum to the upside and again get back above that 50. IWM weeklies, next leader, doing quite well. At least the weekly chart is holding above this support area, which was resistance of 120.42, and we're doing okay. But remember, we just took back the previous week gains. We took them back last week, so we need to see how the IWM start to trade. Now, it is the strongest of the 5 because we are above the 50-day moving average, where everything else is at or near the 200 and well below the 50. That is a good sign. It is one of our leaders. Again, making that higher low from this previous low to this previous low to this previous low, so that's a good sign as well. Higher highs, higher lows. Again, I would like to see this back above the 20 and recapture half of this candle. Okay, that's going to be important. So let's see what happens today and tomorrow. And lastly is the Qs. Same thing, technology. Now that Apple's out of it, the Qs actually trade pretty well. Actually, the NASDAQ trades better than it did when Apple was in it. So let's keep an eye on this. It needs to get back above the 50 again. Remember, the theme remains the same here. Most of the indices, or all of the 4 of the 5, IWM's the only one, the Russell is the only one that's above the 50-day moving average. Everything else is below it and at or near the 200. So watch today. Look for clues in these indices if we start to break down here. Again, we are up in the pre-market, but let's see if these gains can be held and into the regular trading session. And then if that's the case, then we're going to be looking to buy some pullbacks in some good areas of support. Until then, I'm giving it at least a half hour to 45 minutes as the market opens to really see if this is for real as pre-market strength. All right, I suggest you do the same. Make sure that your analysis agrees with what I'm looking at before you do anything. Have a great day. We'll speak to you tomorrow, everybody. Take care.